How's it going today, guys? So today we're going to be talking about the 5 biggest lies that you have been told about investing and money. Now, the reason I'm making this video is because I was working on a page for my stock market mastery course, and I was trying to come up with the 5 biggest misconceptions about investing. And after I compiled this list, I realized that would be a pretty interesting video, so I decided to turn this into a video for you guys. Now, if you guys have not applied yet for my stock market mastery course, I am going to be running a test group through this, and the deadline for that application is Friday at 11:59 p.m. Eastern Standard Time. So if you guys do want to apply to be one of the first people through my stock market mastery course, the link for that is in the description below. But the first lie about money that you have likely been told is that you should trust others with your money. So the truth is, most people have no idea how expensive active money management is. And a lot of us out there have financial advisors because we believe investing is very complicated. There's a lot of sophisticated language used and trade lingo, and it's made so that most of us probably can't understand it. Investing is very easy to understand, and many financial advisors and people in financial services make it out to appear that they're the only ones who can do what it is that they do. And the truth is, they are not. So my guess is most people out there, if you're watching this video, if you are invested in the market, you probably have an actively managed mutual fund. I want you guys to remember that at the end of the day, financial advisors are salesmen, and they make money by recommending certain investing products to you. So how is that for an unbiased opinion? Are they really going to be telling you what's best for you, or are they looking at what is best for them in terms of how much commission they're going to make by getting you set up in that specific fund? The average total expense of a taxable investing account is 4.17% per year. So the other option aside from an actively managed mutual fund is an index fund. And now index funds are not actively managed, they track an underlying market index, and as a result they are significantly less expensive. In fact, the average expense ratio of an index fund is 0.25%. So just for example's sake, let's say you had $100,000 invested over the course of 25 years, and both that actively managed mutual fund and the index fund earned you an average annualized return of 8%. So after 25 years, you would have $255,900.63 from that actively managed mutual fund, if you assume it has that total expense ratio of around 4.17% according to that Forbes article. Now with that index fund with a 0.25% expense ratio, you would have $646,296.75. So that 4.17% expense versus a 0.25% expense cost you $390,396.12. So that is how much active money management can cost you. It can be very expensive. The second lie about investing is that you should buy stocks when they are up. So let me ask you this. If you wanted to go out there and buy a sports car, let's say you wanted to buy a Lamborghini, and you got to the Lamborghini dealership and the guy said, hey, guess what? This Lamborghini is 50% off today. I'm guessing you would buy that car, especially if you were in the market for a Lamborghini. But on the other side of the coin, if you were looking to invest in a certain company and all of a sudden you found out that they were selling shares of ownership for 50% off, you would be afraid to invest in that company because the share price was down. The truth is, stocks are the only thing that we are afraid to buy on sale, and I'm not sure why this is. If you ask anyone out there for advice on investing, I'm guessing somebody's going to tell you to buy low and sell high. And a lot of people think this is common sense, but it really isn't because so few people actually follow this strategy. They buy whatever today's winner is without realizing that many of today's winners are in fact tomorrow's losers. So as a result, they buy whatever stock is way up and they follow whatever stocks are in the news, and they buy up high, and then when that stock price falls, they sell out of fear and they lose money in the stock market. And I believe that is the number one reason why people lose money in the stock market is because they buy high and sell low, because they buy today's winners. The third lie about money and investing is that you can save your way to financial freedom. Now, this may have worked for your parents or your grandparents, so if they're out there giving you this advice, if you talk to older people about money and how to save up money, they may tell you, just save your money in the bank. Now, they're not trying to deceive you, but they are giving you terrible advice because while this worked for them, it is not going to work for you. So in July of 1984, the interest rate on a 5-year certificate of deposit from a bank was around 12%. And for those of you who don't know what that is, that's a very simple investment where you essentially lock up your cash for a set period of time and you earn a guaranteed rate of interest on that, and it's FDIC insured, so you will not lose any principal. It's guaranteed money at that point. So you could have earned a 12% guaranteed return over those 5 years in 1984. Now today that same 5-year CD on average earns you 0.91%. compared to 12% in 1984. Now to make matters even worse, the average bank account in the United States pays an interest rate somewhere around 0.05%. So following the rule of 72, it would take you 1,440 years to double your money at a 0.05% rate of interest. Older people had something called a pension to rely on, and this was regular payments for the duration of their retirement until they passed away. So the employer-sponsored 401k replaced the pension system, and the 401k has been a complete failure if you look at the numbers. In fact, 50% of working families have $0 in their retirement accounts. And I'm really ashamed to admit this, but when I graduated high school and before I started educating myself on investing, I thought a 401k was $401,000. And that's largely because our schooling system failed to educate us on something so important. I mean, a 401k is the difference between being able to retire and not being able to retire. Yet they never taught us this in school, and this absolutely blows my mind. Now, the fourth lie about money is that you can rely on Social Security income. So I want to give you guys a little bit of history on this. So the Social Security Administration was founded in 1935 after the Great Depression. And in 1935, the average life expectancy was 61 years. Today, a man that reaches 65 years of age can expect to live past 84. And a woman that reaches the age of 65 can expect to live past 86. So the number one problem with this system is that we are living a lot longer today than we were when this system was first put into place. The scary thing is the Social Security Administration is slated to run out of its $2.8 trillion cash reserve by the year 2034. On top of this, when you consider factors like automation and outsourcing, there are fewer people entering the workforce than there are people exiting the workforce. And remember, the Social Security system is funded by a payroll tax. The truth is the Social Security system is going to change drastically because it has to. These numbers just don't make sense. And right now, the average benefit for somebody on Social Security is $1,341 per month. I want to ask you guys a question right now. Could you survive off of that amount of money? And what happens when they have to lower that amount? Okay, so the fifth and final lie when it comes to money and investing is that investing is time-consuming and complicated. The bottom line is this, guys. Investing can be complicated and time-consuming if you make it complicated and time-consuming. It can be very passive, or it can be very active and require many hours of your time each day. And one of my favorite quotes that explains this is by John Naisbitt. "We are drowning in information but starved for knowledge." And this is very true, especially today when there is so much information out there. Many investments are too complicated for the average investor to understand. That is why my number one rule when it comes to investing is never invest in something you do not fully understand yourself. So a perfect example of this is the collateralized debt obligation, or the CDO. And if you guys have seen the movie The Big Short, I'm sure you are aware of this. This overly complicated investment vehicle was a major precursor to the 2008 housing market crash, and that market crash cost the average household 33% of their net worth. And that was largely due to the fact that people had no idea what they were investing in. This is what happens when things become too complicated. In fact, some of my favorite investing strategies are completely passive. I'm going to give you guys two examples of this. One would be investing in index funds through a dollar cost averaging type strategy, where every month, no matter what, you're buying more shares of these exchange traded funds, whether or not they are up or down. And over time, you're paying the market average for them. You don't have to worry about timing the market or anything like that. Another strategy is to simply invest in blue chip stocks that pay you dividends each quarter, and setting up a dividend reinvestment plan where those dividends are automatically reinvested every quarter. These are completely passive investing strategies that literally anyone can implement and understand. They are not time consuming and they are not complicated. So I want you guys to understand there's no reason why investing should be those two things unless you want it to be. Anyways, guys, I thought this would be kind of an interesting topic for this video. This is the 5 biggest lies when it comes to money and investing. So if you guys enjoyed this video, if you agreed with anything I said, or if you disagreed, please let me know in the comment section below. But if you guys like this video, please drop a like and then consider subscribing to be notified of future uploads. And as always, I thank you for taking the time to watch this video.